The Hedgeless Horseman here again, second time on June 7th, 2024. I was going to cover some more companies in the last video, but I ended up talking a bunch of Prisma Metals, and I ran out of time. That went up to like 2 hours in length or something. Anyway, first of all, thanks to the sponsors. So, Kodiak Copper, a recent banner sponsor of mine, they announced yesterday that they're increasing their private placement to $6.6 million. And the market cap right now is 31.6. This was actually a very hot stock for a while. I mean, this is not, it wasn't the same company, but so if we look at a 3-year period, it reached high here of 1.9. I think it might have been higher. It was really a hot stock without the copper market actually being too hot at the time. Excuse me. Because tech invested, and they had some really good results up in BC. And yeah, so I mean, this is obviously a good sign that it's they're upsizing it. And what's also good, of course, it's, hey, if you got money, you can drill, and drilling can provide potential catalysts. And I think there's a lot of stuff to test here. Here you can see the company pitch, sister company of Great Bear Resources. So I mean, they're in the Discovery Group. And the Discovery Group, I mean, they have some pretty big successes. Great Bear is obviously probably the latest standout company in the Discovery Group, and having Tech Resources as the largest shareholder is obviously great from a I mean, third-party validation perspective. That's like, hey, I'm not a geologist, but Tech sure has really good geologists. So if they think their land package has the potential to host, you know, a significant copper district or copper porphyry cluster, that's probably good enough for me. And yeah, Chris Taylor, chairman, sister company of Great Bear Resources, a major discovery success, acquired for $1.5 billion by Kinross. Both companies founded by Kodiak chairman Chris Taylor. So I mean, I think Great Bear is one of the best success stories for any gold junior in the recent years. So I think I gotta assume that Chris Taylor probably knows how to navigate the junior sector very well. It's like, what decisions to make, when do you put out a resource, when do you don't put out the resource. Obviously, Great Bear is famous for not having put out a single resource, and they still got acquired for $1.8 billion. And a lot of people probably follow Chris Taylor because of his expertise and his, let's say, knows to find opportunities. And yeah, a lot of people will know John Robbins as well. He's been involved with quite a few successes, including Fosterville. So those two, I think, are the most well known here, and you can see some of the success stories and experience here. So the people is legit. I think what's the insider? I don't remember exactly. Insider's management 7.8. It's not absolutely huge, but it's not bad either. And oh yeah, okay. So it went up to $3. So it's basically this is from the discovery of the Gate Zone. That's when I remember this was a really, really hot stock there for a while, and they even have a slide of that, let's say, discovery hole. And here's the share price performance. And that's what typically happens. Runs like hell. The Gate Zone didn't prove to be as large as everyone hoped. But they're still, I mean, they haven't put out a resource there. But they, I mean, you could obviously make a resource, but it's like, is that enough for tech? I don't think so. The market doesn't think so either. Okay? So, meaning that, okay, you have something. You don't have a bird in the hand. Well, you have a bird in the hand, kinda. Kinda with the gates on, but still, it's not big enough that... That's not, let's say, they don't think, the market doesn't think that's a standalone copper project. And that, you know, makes perfect sense. Okay. If it's not, if the market doesn't think, hey, this isn't close to 1 billion tons, you need to find more. Okay. And then the sentiment, I mean, you know how it works. Nothing changes sentiment like sentiment. And everybody knew they were gonna need to raise money, so it's gonna get punished more. That's just how this sector works all the time. As soon as people think the next material, let's say, news release is gonna be dilution, everybody's gonna be front running it. And the people that even like the story, they might sell it because they think, hey, I'm gonna buy back the shares in a private placement anyway. So they see no reason to buy it. They see actually even more reason to sell it down more, because they can get in, maybe get in bulk, get a bulk position again at an even lower price. All of that is going to weigh on sentiment. But this is British Columbia. This is basically where it seems that the majors really want to be nowadays. And the best part, what I didn't really understand until I spoke to the company, was that it's like here, grades of neighboring copper mines. Copper Mountain, 0.24% copper and 0.1 grams per ton AU. Highland Valley, 0.31% copper. So apparently it's very cheap to mine here in BC. I'm assuming that's a lot because of the, you know, they have a lot of hydropower, excellent infrastructure, local workforce and services. So it's like, I thought they would need much higher grades, personally. I don't know why I thought that, but if you have Copper Mountain and Highland Valley, I mean, that's not even close to, you know, what you see in the grades down in the Andes of Peru and Chile, where they need like, I don't know, 0.6, 0.7%. Now this is not in the high Andes, cheap power. I'm assuming there's a lot of water to go around, and you already have proof of concept that this is an operating mine. Whereas if you see these kind of results, I don't think that's going to get the market excited. But if that works, that's material grade already. So that's what I think I had been kind of missing from the story, that I needed, you know, talk to management to basically educate myself that, hey, what do you think the grade, you know, economic grade is? You're probably off. And I thought it would be actually a much higher grade needed. But that's again, it's like I'm not a geologist or a mining engineer, and that's why typically I put people so high on the list, because these people wouldn't bother, I don't think, with this project if they didn't see the potential for something that a major company would buy, meaning an economic discovery. So this is the wait, let's go over the, I think they had a slide over what got the market excited, the tech excited. Let's see here. Oh, here. Transformative discovery of high-grade gates on in 2020. Tech becomes largest shareholder. I mean, these grades, if you saw what the grades were for the operating mines, this is very high grade. 282 meters of 0.7% copper, half a gram AU, and some silver. That's way above what, you know, they're mining in Highland and Copper Mountain. And here you have, you know, the 900 meter depth. They drilled it off over, what is it, like, let's say a kilometer. Okay, but the market isn't convinced that, I mean, obviously you could make a resource here. They haven't done a resource. Why is that? Because they don't think they get enough bang for the buck. That's my assumption. It's like they know this is, well, they don't think this is enough to have a, you know, standalone project here at around these copper prices. So okay, why would they put out the resource? Well, maybe it would cater to the market, but it's like, if they think, hey, you know, there's lots to do here, makes sense why they don't put out the resource. Again, they did that with Great Bear. They just kept on drilling Great Bear. I think they had 5 rigs or 6 rigs or something. Why would they put out the resource at showing, let's say, 1 to 2 million ounces in the case of Great Bear? Because they're like, hey, we're after like 5 million plus. We're after a world-class gold deposit here. So we're going to drill until we have one. Otherwise, it's just, I mean, they're spending money on, I mean, what do they prove in Great Bear's case? What do they prove that they have, you know, if they get to 1 million ounces? It's already going to be outdated if they have 5 drill rigs. So it's always going to be lagging behind, and nobody's even going to care about 1 million ounces anyway. But they have a lot of targets. And as we know, porphyries tend to show up in clusters. So maybe not the gate zone. Where is it now? Yeah, maybe not the gate zone is enough for, I mean, it's not enough for someone to build a standalone mine, make a mine out of this project. I mean, at some copper price, obviously it would be enough, but hey, we can't wait for, you know, 10 years in the future and not do anything, just hoping, because they have a bunch of other targets. The stars are what's been drilled. Historical targets are in the red, and then Kodiak targets are in yellow. They have done AI as well to delineate new targets, and some targets showed up they didn't really, or they hadn't thought about. Do we know that the AI generated targets are gonna be, you know, oh, there's for sure gonna be deposits there? No, we don't, of course. Are they worth testing? Well, I would think so. But the main thing that I'm excited about is here, South Zone and 15-16 Zone. Intervals of over 1 kilometer of porphyry mineralization from surface, potential for much larger zone. So if I understand it correctly, the idea was, or what was thought, is that this was a separate thing, and the South Zone was a separate thing, and maybe the added zone as well, because you can see it's like historic drilling, and note here that all of the drilling, historic drilling, is shallow. And here, data suggests, I mean, it's not like they're only guessing, they're looking at the geochemistry and all of that. Data suggests that the south, mid, added, and 15-16 zones may be part of a much larger system that comprises all 4 zones. So that, as you can see the outline here, that this is not 4 different footprints of like smaller bodies, let's say. That this is a, let's say, a relatively small porphyry here and porphyry there. That this might be one huge system. One huge footprint. If that's the case, instead of like, oh, we're looking for a, let's say, smaller near surface or high grade zone here and one here and one here, maybe this again is just one fat porphyry body that's probably been faulted and stuff today, but that this is a one coherent target. Here you see it's like the scale here, 3 kilometers. And here you have the historic drilling. So they put out some deeper drill holes. And here you have over 1 kilometer of 0.17 CU equivalent. Here you have 45 meters of 0.25, 813 meters of 0.16. That is just, I mean, that is just 2 holes. Out of this whole cake. So there's almost been no deep drilling here. Do they know exactly where the high grade core might be? No, but you see obviously huge copper mineralization. They're probably, if I had to guess, they're still probably in the outskirts or whatever. I mean, if we assume just that, hey, maybe the core is around here. I mean, it's an oval sphere here, I was going to say, if you can even say that. And it's all been tested to limited depth. I think I mean, how do you prove up or kill this target? I mean, you got to do quite some more drilling and just noting the scale. I mean, if you have, as we know, what the grades are for the nearby deposits. So here you have 88 meters of 0.4 copper equivalent. I mean, that's pretty much in line with what the other copper mines, the Hud Bay operation is mining. So if you have like south here, mid zone here, so you have this near surface stuff. I mean, this is should be open pitable obviously because there's almost no strip ratio. So you have kind of, you're finding near surface stuff that could be making money I mean, these grades should be making money at today's prices. Or you're going to build an operation based on what's shown in the near surface parts of the porphyry right now. Is this a world class copper project all of a sudden? No, I don't think so. I think the big bang is if they show that, or they find the deeper, higher grade core of this. If this is indeed one giant porphyry system here, next to other porphyry clusters, if this turns out to host a very large porphyry body with economic mineralization, this could be an absolute, I mean, at the end of the day, could of course theoretically be a world-class porphyry district or a porphyry project. And they have the gate zone already. So is the gate zone enough to tip this into, hey, this is probably gonna become a mine at today's prices? I don't think the market believes so. I don't think the company believes so. But is it pretty good to have already they don't have a deposit or they don't have a resource on it, but one could make some assumptions obviously, because they provide they provide some volumetrics here. So I mean, this is at least a start again. And obviously if one would put up something here, I mean, they probably would mine the entire thing. So I mean, you would be looking for a copper porphyry camp. That's like, okay, standalone gate zone is not enough. But if this turns out to be something major, this could become a potentially, of course, a mine on a standalone basis. MPD, which is the project, interpreted to host district-scale multi-center porphyry system. Gate zone discovered proves that system hosts high-grade zones. Mineralization from surface and a depth of almost a kilometer. At many drill targets, multiple high-grade intercept. So the point is that there's a lot more work to be done here. And they just recently put that together that, hey, we thought, and I guess previous operators thought, I don't know exactly when this was drilled, but obviously they were chasing, they didn't even test it at depth. So the thought was that this was a standalone target. 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 And obviously you direct the drilling and all of that exploration efforts based on the concept that, hey, we think these are, let's say small porphyries or something. But now they've come to the realization that this might actually be one huge body, and I assume that's going to change how you approach the exploration. So again, we know. Here you see the AI targets. 24 targets. 24 target areas on property. Only 8 drilled by Kodiak today. 2 new drill rig targets from the 2023 regional program, Blue and Celeste. New Celeste drill target. Rock samples, copper and gold. Here you have Blue. Great potential for more discoveries. So, okay, how does one wrap one's head around Kodiak Copper? We know what the market cap is. I mean, you saw market caps like this in 2016 with a pre-discovery gold junior that had a soil anomaly. In this case, you have, in my opinion, a very good team. You have Tech as the largest shareholders. You have plenty, 24 targets to cans to kick. You have good explorers. You have people that have a nose for what a good project is, and they're in it. So by definition, one should assume that this is a legit copper exploration story. It's in BC. It's in an area where we see the critical threshold for success to be probably lower than what most people think, simply because if we look at the neighboring copper mines, these are not barn burner grades, but they made mines out of these grades. And obviously Kodiak is showing they have grades like this near surface, and they have higher grade zones as well at depth. So they know the porphyry cluster here produces grades that are similar or better to producing mines. So we know the porphyry body runs. They have economic, or one should assume, or relative to the other operating mines, yes, they have similar grades, and if they are economic, I'm not saying it's an economic project, I'm saying that the grades are enough that they reach the thresholds for other operating copper projects in the area. So how is this story going to play out over the next few years? I have absolutely no idea. Is there potential here? Obviously. And what I like about Kodiak is that, which they've shown, they are not afraid to swing for the fences. They didn't do a 500 meter hole. They did over 1 kilometer holes. They're after that's kind of Discovery Group. I guess that's what they're kind of famous for. They swing big. Great Bear, perfect example. Just drill the crap out of it. Make it just grow it. And every shareholder made out like a bandit, almost regardless where you bought the Great Bear. The exit was $29 per share. Highest share price in the history of that company. So if you like copper, if you rank jurisdictional risk, or if you like better jurisdictions, where it's like, where would you get most bang for your buck in terms of success? That's probably going to be in BC, because that's where the majors seem to want to operate. We obviously have Brixton Metals, and they're in a much more remote place in BC, but they have BHP. And again, I think one has to appreciate just how big of a target this potential I was going to say cluster of targets, but it's actually not a cluster of targets really. I mean, again, they believe they're seeing the same, let's say, characteristics here and here. So they believe that this is actually not separate zones, that this might be one humongous target. They obviously want to test that. I wish they would probably have raised even more money, because they obviously, if you have this many targets and you're chasing elephants, you want to test a lot of targets, you want to drill deep and all that. But point is that these guys swing for the fences. They don't seem to play it safe. They want to make big discoveries. They know what success looks like. They know what majors want. We know that Tech is the largest shareholder, so they see the potential in the project. So how this is going to play out, I have no idea. We just know, again, we know the price we're paying. That's 31 million or 32 pre placement dilution. So let's say 40 million CAD. Let's say we're going into a good copper market. Let's say premium jurisdictions get even more love, and they show that, hey, it's not only the gap zone. We're hitting maybe at that massive combined target down there, or other targets. They show there's more here. That the gate zone was not a one-off. This is a new porphyry district, let's say, and the market starts to sniff out that, hey, this is starting to look like an economic, that they might have a mine here. Obviously, 40 million is not going to give it justice at that point. We already know, as we can see here in the share price. Where is the share price? It ran up to, 3.2 CAD per share on the gate zone. So that alone was enough to get everyone excited, because they showed that, yes, the copper porphyry cluster here has the ability to produce high grades. But the gate zone alone probably isn't as big as they hoped. So there was not enough high-grade mineralization at the gap zone for the market to be convinced that you already have a mine. But that is, that's to be decided. That's the point. That's to be decided. So back here was obviously at a much higher market cap. So we know what the stock can do. We know what the stock can do when people start to believe that, hey, this might be a significant discovery. So yeah, I have no idea how Kodiak is going to look over the next 24 months. I can see the copper market getting better and better. I can see the world getting more and more chaotic. I can see copper getting more and more critical in the eyes of a lot of people. We see majors try to do copper deals all the time. So if we just play around with a few scenarios that, let's say they do show they have more projects as well, but let's say they do get one good hole in this part of the project, in this big target. Try to imagine, it's like, what do you think the forum is going to think? How do you think the market is going to respond? You have a footprint this big, and let's say that you produce one headline hole. You see the footprint's obvious, and it's barely been tested at all at depth. Let's say, I don't know where they're going to be drilling exactly. Let's say they get one slammer of a hole somewhere here. I think the game is on at that point. I think it would do start to do this again. But do we know that's going to happen? No, of course not. Is there a chance? Absolutely. Why not? They've shown that there's high grade copper here. They've shown that they have already, I mean, in the periphery, let's say, they have copper grades near surface that's in line with what the other copper mines are producing at. So I think, given the land package, given the location, given the jurisdiction, I simply think, and given the people involved, given the third-party validation from Teck, given the copper fundamentals, this just looks too cheap for me. And as always, it's going to be one of those cases where it's like, if you would fire and forget, it's like, okay, I'm putting some money into Kodiak Copper. I believe the management team is smart. I believe they will spend money wisely. I believe there's a chance of significant success in this project, in this porphyry cluster. If we, again, did a fire and forget exercise, okay, you're buying in at, let's say, 40 million. Fast forward 2 years, you're probably either going to be down or up a lot. If you're going to be down, if they didn't end up finding anything, or the copper market for some reason starts sucking all of a sudden, contrary to what the major miners believe about the copper fundamentals going into the next few years. But if they do make more discoveries, if they do show that that big target has a higher grade core, and it might be very large, and they test that, going into a favorable copper environment, and the market starts to think not only is it hot on copper, it's starting to press in that, oh, this is a major copper discovery in BC, Canada, where everybody seems to want to have a mine. Do you think it's going to be trading a bit over 40 million at that point? Yeah, I think so. What's the risk here? Obviously hard to say. It's not a pre-discovery play, obviously, because we already have the gate zone. Is that enough? At these copper prices, or at $4 copper, in this day and age, no, I don't think the market believes so. And I mean, I can understand. I don't think the company believes that. So is there a standalone discovery already, a standalone deposit that is mine worthy? Not at today's assumptions, but at least you know there's copper there. You know this. We know this is a district, copper porphyry district, that has grades, high grades as well as grades near surface that are in line with other operations around. So if we think, or if we go to the end, it's like, is there going to be copper mining here someday? Yeah, I think so. I mean, it all depends on the copper price and all of that. But yeah, so I think this is simply, if you don't like, I mean, if you like the idea of sticking to the best people, and you like copper, and you're okay with taking exploration risk, I don't think there's too many stories that are as good as Kodiak Copper. It's not the highest risk one. It's not the absolute cheapest one. But you have the discovery group of people. You have Chris as the chairman. You know what he did for Great Bear. You know, you can kind of know that if they hit a good hole this year, make a new discovery, let's say. Yeah, we've already seen what the stock can do, and we've obviously also seen when it's like the junior bear. I mean, that's the kind of the funny part. It's like it kind of topped in excitement when the junior sector topped as well. So it kind of makes sense that obviously it's going to get more punished than it should, and recently it's going to get more punished because everybody knew they were going to need to raise money, yada yada yada. So we can understand why it became a perfect cycle of lower prices. But is this expensive? I don't think so. But again, it's like nobody knows if they're gonna make a discovery. I think they have the people in place to make a discovery. And like one of those stories which almost goes for every exploration story, there's a million different scenarios this can play out. In 2 years, again, if I had to bet, I think it's either gonna be a lot higher or lower. And the max we can lose is 100%. And that's assuming the company literally goes bankrupt. I don't expect them to go bankrupt. We already know they've hit something. They already have copper. But if they do make a discovery or more, because the funny part, the thing is, of course, that if you already have the gate zone, you're getting closer to the critical threshold for development. Because the gap zone, or gate zone, if the gate zone is not enough, you're still getting closer. Let's say you're halfway to a bird in the hand, or a significant bird in the hand, or a third way to a bird in the hand. Maybe one additional gate zone, keep mixing that up. Gate zone is enough. Like now you all of a sudden have something that this might not be something that a major cares to set up shop here, but another gate zone, Jesus, all of a sudden you might have hit that. Or who knows, of course, like maybe this area holds something big enough that's like you don't even need the gate zone. Nobody knows. But that's the thing, investing is Schrödinger's cat. The only thing we know is what we pay. And in this case, we know the context. We know that the context is, we know there's copper there, we know there's copper gold there, we know there's near surface mineralization with grades that are economic in other parts. Now we know they think there's a big whopper of a target to the south. And we know the people involved. We know that tech funded these guys. We know about the probable or how favorable the demand supply looks for copper in the coming years. We know that BC is a very hot jurisdiction. So yeah, like always, if I knew Kodiak was going to be a massive success, I would be all in. I don't know it's going to be a massive success. I just know I'm probably paying around 40 million Canadian, and I think significant success would get priced a lot higher than 40 million Canadian if we are indeed in a bull market for copper. That's about it. Then we have, on the topic of copper juniors, Hannan Metals. Hannan now is drilling update and private placement financing to raise 2.5 million. At the Valiente project, Hannan has discovered a Miocene age porphyry epithermal gold copper mineralized belt that extends over 150 kilometers by 40 kilometers in area, located in central eastern Peru. With this belt, a clustered porphyry epithermal camp has emerged where 5 porphyry copper gold targets and associated skarns have now been discovered, and then they named the targets and 2 epithermal prospects. At the San Martin project, located 400 kilometers northeast of Valiente, Hannan has discovered a basin-scale high-grade sediment-hosted copper-silver system that extends over 200 kilometers by 100 kilometers. So here you have the San Martin. That's the sediment-hosted. That's the Congo-type mineralization that Ivanhoe Mines is mining. Drill rigs on the ground in San Martin in August 2024. A 2-stage drill program is planned. First stage, 2,000 meters drill program over 2 kilometer strike of mapped surface mineralization down to 800 meter depth. Second stage, subject to stage 1, a further 1.5 kilometer drill program to test the continuity of mineralization. Subject to results in stage 1 or stage 2, additional areas may be tested within the 7 kilometer long permanent area. San Martin West. Environmental data is being collected at San Martin West over an outcropping copper-silver mineralization trend that has been mapped for over 2.3 kilometers of strike, including 5.8 meters at 3.1% copper and 65 grams per ton silver. That's the interesting part. If I understand it correctly, they're finding two different beds. And also from what I understand, with these sediment-hosted copper systems, is that it's the, let's say it's like, it's not enough that, hey, wow, we have a, Ivanhoe Mines, Kupferschiefer type system. The trick is to see, okay, are they continuous? Or is it just blob? It's like, okay, you find, oh, here you get high grade copper, and then there's no economic, patchy basically. So that's, from what I understand, that is the key here. The key is, are these continuous? Is the mineralization continuous, or is it just very patchy? Because obviously if you find a lot of stuff like this, 5.8 meters at 3.1% copper with 65 grams per ton silver, if you find a good extent of that, then you probably have a good mine. But permitting takes time in Peru. I think it's getting better though. But this is obviously, they have the deal with Jogmec. They are a giant. I think it's a state-owned Japanese. It's a state-owned Japanese entity. And from what I understand, the Japanese are great to work with. They're serious. You're not gonna have any ESG problems or anything like that. They do everything by the book. So to have Jogmec, I'm pretty sure they're funding this. So this is up next at San Martin. Not a huge program, mind you, but still, you have it outcropping its surface. So, they want to see, obviously, if they can find at least some areas where the continuity is good. So if it's outcropping its surface, you obviously don't need to test it too deep probably, to still cover a pretty good strike and, down dip extension. If that comes back, if any and of course, the torques are so huge that it's like, the torques are so huge that you can drill multiple areas and still, if you find, I don't know, it's like, 1 kilometer by 1 kilometer, and there you have continuations, like the grade kind of holds up over that area, that, I don't know, maybe that's enough to, build something. I haven't done the math on that, but if you have like, we have 100 kilometers, no, that's Valiente. Here's like copper silver system that extends for over 200 kilometers, 200 by 100 kilometer. That doesn't mean obviously that, this is all going to be mineralized, good grades, same grades over that kind of a scale, because that's absolutely humongous, obviously. But so there's probably if you have a system that big, there's probably almost by definition a lot of zonation, and then there's probably zonation within the zonation in a sense. So the trick is obviously to find at least parts of the system where the grade holds up, where it's not too patchy, where it's just not go from economic to non-economic, then economic, non-economic. So that's the Hannan strategy to geologically de-risk targets and sequentially drill permit these targets such that the company will be drilling multiple targets over these vast frontier areas over next years. I think they mentioned 5 years also in this, or maybe it's actually in the presentation. But here, going back to like the Kodiak Copper approach, it's like from a fire and forget perspective. We know what is the market cap? I think it's around 38 million cap. Okay, we know what we're paying for it. We know there's good people behind it. We know Jogmec funds them. We know Tech is the, I think, largest shareholder. Yeah, okay, yeah. Jogmec joint venture, Tech 9%. So we have third-party validation. You guys, you have something that could be absolutely massive. We know what we're paying for it. And they plan on showing that or testing that potential over the next 5 years. So in a fire and forget scenario, for a hodler, it's like, okay, I like this bet, given their targets, given their plans, given the third-party validation, given the people involved, given that they're chasing copper, given what we think is going to happen with copper over the next 5 years. Obviously, the simplest case, and this is why I think this is one of those cases that's like, if there's these are like the epitome of a hodl story in a sense for exploration potential. Because if you just think about it, it's like, okay, I'm not gonna mess around. I'm not gonna trade this. I'm not gonna try to be cute or whatever. One could obviously make a case that, hey, at this price, given what they're gonna be testing over the next 5 years, like with the Kodiak Copper, either they're gonna find nothing and I'm gonna lose money. Let's just assume they found nothing economic, nothing of significance at either of these large-scale projects. Then you're going to lose money. So you know what the downside risk is, obviously, like 100%. But if we fast forward, let's say 5 years. Imagine the amount of news releases that Hannan probably is going to put out over the next 5 years. And it's obviously going to get, ramp up, let's say. The more they get permitted, the more they can test, the more they can drill, the more chance of a discovery, which gives them more reason to drill, etc. So imagine the sheer scale of the potential news releases that's going to come over the next 5 years. Obviously, then you have like a huge event horizon in a sense. It's like, okay, I know the downside is 100%. But if I buy, let's say I buy a position, and I don't even look at any news releases, I just come back in 5 years and see what my position did. The worst case is that you don't have a position. Every project became worthless, and they have projects in Ireland as well, so they have a lot of targets. So assume again, it's like literally they would need to get bankrupt, and the same goes for, let's say they keep doing stuff, diluting, and no success, which looks highly unlikely given the quality of people involved. But still, let's say that. So for all intents and purposes, even if it's the stock price is down 80%, let's say it 100% downside. That's the downside. We know what we can lose, 100%. That's the beauty, obviously, of exploration stores or this sector in general. The downside is always 100%. It's the upside, the sheer scale of the upside, the risk to the downside. I mean, how likely is it to lose 100%? That's where the risk reward can be materially different from one junior to another. Compared to a junior, one target, one pre-discovery target, not even an impressive target, just one pre-discovery target. Let's say it's trading for 15 million. If they kill that, they don't have a store anymore. And let's say there's crappy management, whatever, so they're not going to be able to even identify a good target, or they don't know what a good target looks like. The probability that you lose money is over 90% probably, at least in time. And the upside is not even impressive, because they don't even have a big target to begin with. Compare that to this kind of a story. You have enough exploration targets that could keep a major busy for years. And they're going to be de-risking, I don't know how many targets. They're going to be drill testing many targets, large targets, over the next 5 years. So I would say, again, this is the beauty which I think a lot of people miss, because everybody overtrades everything. They try to parry every single whatever. I could make the case that a no-brainer bet and a no-brainer strategy in the case of Hannan, and I'm not saying it's the absolute optimal one, depending on, like, let's say you buy now, come back in 5 years. Do I think that's a good bet? Yes, I think that's a good bet. There's obviously cases where it's like you can make a lot of adjustments, like they make a discovery, the stock goes up 100%, then you buy in heavy, or it drops 20% in price for no reason, and then you you adjust in the case where it's like, okay, value went up, so now I like it even more because it got the risk, or value didn't go down but price went down. So it's like you can obviously react a lot to what Mr. Market throws at you, what prices Mr. Market throws at you, what happens from a news flow perspective, and there's like sometimes you might be de-risking a bit, sometimes you may increase your exposure, whatever. But that obviously comes down then to, it's like you got to know what you're doing. But I would suggest that the simplest and most foolproof way to invest in the junior sector is cases like these where it's like, if we're trading, there's obviously the possibility that we're making mistakes, and since 95% don't beat the stock market index, I think that's an even higher percentage in this sector, because everybody again buys high, sells low, yada yada. Again, I would argue that for vast majority of people, how they should approach junior investing is basically the fire and forget strategy. You can obviously, let's say you wait until, take Garibaldi Resources. It goes up. It went up to 500 million pre-assays. You could say, well, I'm going to do the fire and forget hodl theory. I'm going to get bailed in time, whatever. It's like, I'm not going to be trading, so probably it's a good move. The thing is, obviously, in Garibaldi's case, it went up to 500 million before a single assay result. So a lot was priced in with no proof of it being real. But the thing is, if the starting bet is low enough, where it's like, what is priced in? Is it priced? What chance of success is it they're priced in that any of the sediment-hosted targets, or any of the porphyry up to 18 major copper, gold, porphyry, skarnet with, what's priced in that they're going to make at least one significant discovery here at 30, let's say 40 million market cap? Not a lot, right? Let's say a world-class porphyry discovery is pretty huge. We know what Ivanhoe Mines, how much money their valuation, how much value they unlocked when they did the, based on their sediment-hosted copper in Congo. Are we anywhere close in that department? How many cans do we kick? We're kicking cans with Jogmec at San Martin. And again, I believe there's at least two different horizons, because they have the, what were they called, San Martin and San Martin West, both Jogmec JVs. Those are obviously, the potential is huge, otherwise Jogmec wouldn't get interested. Okay, so we have two huge cans to kick. We don't know what the chance of success is. Maybe it's 10%, 20%. But given the price, that's still material. Even if you discount it by the fact that, well, Jogmec would have the majority ownership. But again, if they do find something massive, just look at what Ivanhoe Mines is worth. So if you take like $2 billion, let's say you get 25% of that, so that's 500 million. Even if you discount that by 20% chance of success, that's still 100 million today. That's pretty, you know. Okay, so 20% chance of success of finding something worth 2 billion. Maybe that's too much. Maybe that's too much. Still that would be 100 million, which is more than twice the market cap of Hannan today. And then you add the porphyry cluster, the Valiente, which I'm pretty sure the company is more excited about than the actual San Martin sediment hosted Kupferschiefer Ivanhoe Mines type mineralization. Do they have the new? I mean, they recently. I mean, here you can see a bunch of stuff. 450 meters. This is over a kilometer. Previsto target. I mean, they're fine. And the best part here, in my opinion, is like most of the places where everybody's been looking for porphyries. I mean, you know, a known porphyry district. Is the low-hanging near-surface fruit going to be left? No. It's going to be the undercover deep drilling. You see that in Arizona. You see that with like BCM, Prisma Metals, which I recently covered, Bell Copper. They're all drilling like, you know, 1 kilometer holes. Because the near-surface stuff, well, it can be covered, of course, but most of the low-hanging fruit, same with the Carlin systems in Nevada. They're drilling kilometer deep holes. They're looking for Carlin deposits that are buried. In this case, nobody even knew this was a porphyry district. So basically, Hannan discovered a porphyry district that still has what appears to be the low-hanging fruit still there, because nobody has even found this out yet until Hannan came along. Meaning that the near surface low-hanging fruit stuff is still here and has not even been tested. That's the beauty. So again, from a risk-reward perspective, if we do risk-adjusted fair value today, I think Hannan is very cheap because they're chasing absolute elephants. Imagine what's the theoretical value here? Okay, you find a new copper porphyry district with scar mineralization, epithermal, and everything that comes with that. You own all of it, and a bunch of the targets are near surface. Let's say going into a copper bull over the next 5 years. I think the market is totally sleeping on this. And of course, I mean, compared to Kodiak, for example, Kodiak, it's in a better jurisdiction. It's close to operating mines. They have the gate zone already. So this is, in a sense, much higher risk because it's not proven. I mean, and it's, again, the threshold for success here, I assume, is higher and all of that. But still, Hannan kind of makes up for it on the amount of targets and that they're at least near surface. That's what I like about, again, if we take a fire and forget approach. Let's see, because the junior sector is obviously very cheap right now, and that goes for, well, specifically I think copper and gold juniors are cheap. Gold juniors even cheaper. But if you did that idea of fire and forget, I mean, I could obviously make a case that at this price, given what could happen over the next 5 years in Hannan, I think it makes perfect sense to say that maybe the most foolproof strategy when it comes to Hannan, for example, again, if we know that most of our active trading is going to bite us in the ass because we tend to buy high, sell low, we get shaken out, we FOMO, yada yada. It makes perfect sense to say, okay, I'm going to limit my actions because the more actions I take, the worse my results are going to be on average. So to just say that, okay, I'm putting, let's say, I'm putting 1% in Hannan Metals. I'm going to give them, I mean, yes, of course, there could be, let's say, Peru nationalizes all projects. Ireland, where they also have a project national. I mean, there's obviously stuff that could happen where it's like, yes, okay, even as a novice, it's like, yes, I should probably be selling here, or I should probably be buying here, whatever. Still, if we do it foolproof, I would argue that it makes perfect sense to like, okay, I'm putting 1% into Hannan Metals. I'm not going to trade it. I'm going to come back in 5 years. I'm not going to do anything with the position. I give these guys 5 years to test most or all of these targets. And you know that at the end of the day, the worst you can lose is that 1% initial investment. If it goes to zero, you lose 1% of that. Let's say you put in $10,000 or $5,000, whatever. That's the maximum loss. But in 5 years, given the amount of targets they're going to be testing, there is also a possibility that these guys will have made one or more significant discoveries, going into a more and more favorable, let's say, copper market. Maybe in 5 years, copper price is at $9 per pound. If you have one or two significant discoveries, like billion plus types discoveries, and who knows what the, I mean, I'm not going to throw out too big numbers, but you know what the value is for some of the Peruvian copper porphyries. 1 billion is not enough. Just look how much the BHP is willing to. I don't think what are they called, Anglo-American. I don't think they only have porphyry deposits, copper porphyry deposits in Peru, but you get my point. I mean, they raised the bid to like 40 billion. I mean, that's mostly for the copper assets. And that's today when BHP thinks they're cheap. They think 40 billion is cheap for Anglo's assets. So imagine if what they see happening in copper happens. What could a good copper porphyry deposit be worth at that point in time? That's all on the upside, in the upside column. So my point is, let's say you do this with a bunch of these juniors, fire and forget, pure hodl style, limit the amount of mistakes you do. The focus is the price you paid. If you get in cheap, that means there's more upside. If you give these guys a month, they probably won't have been able to create much value. Give them 5 years to test, I don't know, 12 targets or more. Yeah. Then obviously a lot could happen. More things can happen in 5 years than in 1 year. And you know, the upside is, I mean, theoretically unlimited, where the downside is always 100%. So this is, for example, is in the hodl folios. At face value, yes, it's high risk, but it's at least diversified to the upside. I hope it makes sense. But of course, then one has to kind of be, that's the thing with the hodl portfolio. Actually, one portfolio, I've forgotten the password. I haven't logged in for a month. But I'm not worried, because all of those stories, if I remember correctly, are cases like this. That's why it's a hodl folio. They are built like, they are, you know, built mostly on fire and forget stories. Whereas the upside cases in those stories might play out over the next few years. So theoretically, those portfolios are built to beat the market if I did nothing for the next 3 years. Let's say you absolutely did do no trading. Obviously, let's say you have a 2-3% position. Let's say it's a similar story like this. One works out. Over the next 3 years, let's say it goes up 10 to 20x. Obviously, that's going to become a very large portion of the portfolio. And some other stories, maybe similar to this, but they didn't hit anything. They didn't prove up anything. They're gonna go. Let's say they're at 2-3% position. They go down 70%. So it's only 1% position. Whereas again, a story like this goes up to 25% of the portfolio. Theoretically speaking, if I didn't take any profits. In a few years, obviously, it would concentrate itself because the success stories would just grow and grow and grow. And who knows, maybe at the end of the day, you would have like 4 stories that make up 80% of the portfolio. Still, and that's with no trading, which would look very high risk. But still, I think that approach would beat the sector. And it all boils down to cheap bets. Cheap bets, the price we paid. Buying low, buying cheap. Because that means more upside potential in every single case. And the beauty, of course, is that it's the downside that's always limited. So Garibaldi, when they were at 500 million, the downside is still 100%. But if that was trading at 50 million instead of 500 million, the downside would still be 100%. But the upside, if they would have made a new Boise Bay discovery, I would have made a shit ton more if my bet cost me 50 million, if I bought in at 50 million and 500 million. So again, the risk is always fixed. The absolute max amount of risk is always fixed at 100%. It's the probability of upside versus downside and the sheer scale of upside versus downside. That's what separates stories. If Hannan Metals was trading at 200 million right now instead of 40 or whatever it's trading at, it would be a completely different risk reward. That's the thing. So I really like Hannan. And again, nobody knows what's going to happen. Nobody has a clue how Hannan will look in 12 months, 24 months, 36 months, etc. We just know that if the company is able to drill multiple targets over the next 2 to 5 years, the more targets they drill, the more shots they have at making a significant discovery. And of course, given that if you have a lot of targets, there's also the possibility of them not making 1 discovery, but 2 discoveries or 3 discoveries, etc., etc. And of course, the beta between the price paid today versus the future value goes up if this approach is followed with time. Meaning, in the next 6 months, they might have tested 1 or 2 targets, which has a theoretical blue sky of X. If you hold it for, or if you give it 2 years, they might have tested 8 targets. So obviously the delta between proven or the risked value goes up if you have a long pipeline and relate that to the price paid today. Because if you drill 1 target, you can make max 1 discovery, right? If you drill 12 targets, theoretically you can make up to 12 discoveries. But that takes more and more time because you're not going to be drill testing 12 targets in a month. So obviously time held, if you have a long pipeline for growth, should correlate with how much money you could make. So if you hold a store like this for a month where they haven't had the time to test anything, what's the point? Why did you even buy? That's not even the case. That's the thing with when I see people trading alpha stories. A story like this, can you trade? Absolutely anything can be traded. But again, the no-brainer, as I see it, with stores like this is that you don't need to trade it. You don't even need to pay attention. If you believe the management is going to do and make the best decisions possible, do you need to look over their shoulder? No. You just assume that if you assume every single decision they're going to make is going to made to benefit them as shareholders, I can't come up with a reason why I would take my opinions or way of doing something over them, because they know a lot more than me about Peru, about exploration, about what majors want, about how it's best to de-risk, where to put the money and all that. I'm just along for the ride. I'm buying their labor. Yeah, pretty long rant again, I guess. I was going to cover even more companies. I guess I got to get back to this. Well, I got to make more videos, I guess. So thanks for listening. Again, consider me biased. I think I covered the Kodiak Copper and Hannan Metals in this one. If I talked about any more companies, assume I'm biased. I'm shares of Kodiak Copper and Hannan Metals. Both are banner sponsors on my site. I'm trying to help them get their stories out. So consider me twice biased. And again, do your own due diligence. Do your own due diligence. If it's got to make sense to you. Every single investment you do got to make sense to you, because there's nobody gonna be there holding your hand when volatility hits. But I would argue that the simplest strategies with the least amount of potential for screw-ups is the best for most people. That's why I think, and like my hodl folios are showing, you can have good results, decent to, actually the hodl folios, they're doing well. They're even up in a bear market, so I think that's a point in itself. And the very emphasis on those is that I don't do anything almost. They're typically made up of stories like, the Kodiaks and the Hannans and stuff, where it's like, yes, they're growth stories, they have risk, but they have so much potential upside that I don't need many to work out. And for a success story to work out, just look at Great Bear. If you bought it after the discovery, you would have made money after year 1. You would have made even more money after year 2. You would have made a lot more money year 3. So obviously the more time you would just have held the success stories, because if Great Bear has 6 million ounces and you bought it when it was priced in like they had 300,000 ounces, obviously the more time you give it, the higher your returns are going to be. So the success stories that actually end up proving blue sky, they are gonna be proving that up blue sky more and more every year. But if you give a success case a month, if you sell it on the first 100% pop, how is that gonna pay for all the other ones that are gonna end up missing? If you were in a bunch of pre-discovery plays, let's say like if you have 20 Great Bears, that's your portfolio, 20 Great Bears pre-discovery. Let's say 5 of them, 25% of your portfolio ends up making the Great Bear discovery hole, and they would go up 20 times over the next 3 to 4 years. And 75% of them would not make a Great Bear discovery hole and not make a Great Bear discovery. They would get cut in half. How on earth are the 5 companies that make a Great Bear discovery, how are they going to pay for the other 75% of companies that didn't make a Great Bear discovery if you sell all of them at 100% profit? You would get back 25% of your portfolio. But you would still lose money. If you let those 5 winners turn into bigger and bigger and bigger and bigger winners, your portfolio would do great. They would have paid for all this 75%, the 15 out of 20 stocks that went to 50. Even if they went to 0, you would be up a lot in your portfolio. Because that 25% of your portfolio would go up 20x with time. Maybe went up 3x, 5x the first year, 10x the second year, 20x the third year. That's the point. That you have to let some blossom. And yes, some will actually make a potential discovery, go up a lot and then crash. Because it turns out they made a discovery hole, but the discovery wasn't, let's say, good enough. But that's okay. You can put that in the, okay, not fail to do a discovery bin. But the ones that make a discovery goes up and it turns out to be a real discovery, they will keep going. If we're after 100% hit rate, there is no such thing. You can have 30% hit rate easily and make a lot of money in this sector because the winners pay off that much more over years than what we lose in the losers. Yeah, anyway, not investing advice. Do your own due diligence. Thank you for listening. Bye bye.